Welcome everyone to First Time Home Buyers webinar on tips, tricks, and mortgage approvals. How does the whole system work? How does it all come together? Drop a yes in the chat if you can hear me. I just want to make sure that I'm audible and everyone is able to hear. Feel free to also drop in the chat where you're coming from, where you're signing in from, what city you're calling from. I got a yes from Sela, from Angel. From Russia. Wow, wonderful. Wonderful. Thanks everyone for taking time out of your day and to join me and on this journey together. We I'm part of Dominion Lending Centers, and we love bringing people together and connecting people and homes. I'm going to show you stuff tonight that you probably haven't heard of before. I will give you some ideas for down payment and just some of the struggles that people have. We want to see everyone propel and go forward. So, like I said, if you want to put your cameras on, we'd love to see people, but I get it. A lot of people are a little camera shy. If you have any questions, you can raise your hand, but I'm just doing this solo today, so we might just have to save those until the end. So feel free to stack up your questions, and I'm doing the best that I can on two monitors. So let me ask you, how is everybody feeling right now? Are you feeling a little concerned about the market? Maybe you're thinking of buying a home. That's why you're here. Are you feeling a little stressed out? Maybe a little intimidated? Feel free to drop that into the chat. Just let me know how you're feeling. Neutral. Okay, someone says neutral, and I get it. Yeah, I would say I'm sort of on the neutral side, but intimidated, anxious. There's a lot of people who are uncertain. I know when I bought my first house, I was completely nervous. Didn't know what I was doing, and Tess says all of the above. Okay. And Renata, we are here to help you with the part of being a little unexperienced during the whole thing. That's our job here today. So I took a look at when a lot of people, when they joined up, I had some questions that I had asked, and this is sort of a summary of what was provided on those questions when you joined the webinar. A lot of the motivation to buy, a lot of it just comes from a family needs a change. Maybe there's a newborn. Family dynamics are always changing, so just a change in the family needs. A big one was stability, and I get it. Not knowing where you're going to be. I was talking to someone the other day, and their landlord is going to be selling their house. Now they have to pack up and move, and they just want somewhere stable to be. This was the biggest one of all. Tired of renting. And I get it. Every month money comes out of one pocket, it goes to the other pocket, and you're drained at the end of the month. A place to call your own and building equity. These were a summary uh, of the commentary when people joined. Let's talk about the big elephant in the room right now. I'll get over that right away. Tariffs and the whole US Canada relations thing. I'm just going to make it very quick and easy and let you know all of this will be resolved. If not today, then tomorrow. This is not the reason to push you away from home ownership. It's going to get resolved at the end of the day, one way or another. And I wouldn't even be concerned about it. In fact, one of our lenders even said, "Hey, look, rates are dropping at you know while we're going through this conundrum with the U.S." So our goal tonight is an easy one. I want you to feel in control and at ease about this process. I want you to be able to look in the mirror, to look to your partner, to your family, and say, "Okay, we got this." That's my goal tonight. By the end of the slide deck, that's what I want you to say. And if you say right to the end, we have a valuable giveaway for you. In fact, why even wait? If you scan that QR code, it will take you to the Dominion Lending Center's Buyer's Guide. So you can snap that on your QR code with your phone, and it's a downloadable guide that you can use and access at your leisure. A little introduction about myself. Where do we start in this home buying process, the mortgage process? What will I qualify for? And some home buying advantages and tips and Q&A. That's sort of what we're going to be talking about today. What gives me the ability to stand up here and present this slide deck to you? Well, I've been in this real estate industry one way or another for over 25 years. I've been a mortgage broker since 2016, an agent licensed in 2009. I am part of Dominion Lending Centers, Expert Financial. We are the largest mortgage brokerage in Canada. Dominion Lending Centers funds more mortgages than all of the banks and credit unions combined. That's how many mortgages that we do with Dominion Lending Centers. I'm a passionate sailor, mountain biker, traveler, and I do donate to a couple of charities, Canada Helps and Care Canada, and 100 Brokers Who Care. So that's a little bit about myself. And sample of all of our lenders. We have access to most of the big banks and a whole whack of lenders that you've probably never even heard of before, but they all play a role in the home buying process. So why am I here to present this to you? There's a lot of other things that we all could be doing. And I believe that real estate is the greatest investment you can make. And I believe everyone should have an opportunity to experience home ownership. I genuinely believe that from the bottom of my heart. And my goal is to be your guide in this journey of home ownership. The journey is about you. It's about your family dreams, maybe getting married, having a child. Just it's the journey is all of your dreams and your passions, and I want to be a part of that and play a small little part of that and help to facilitate some of these dreams. So, who is this presentation for? It's for first time home buyers. So if you're buying a house for the very first time, this presentation is for you. If you're buying in the next 3 to 6 months, this is for you. It is providing a roadmap to follow. It is not for someone who's looking to buy their second or third investment property. This is not for someone who is a house flipper. Although we do have programs for those and they're wonderful, but this slide deck is simply for a first-time home buyer. So the mortgage process, how does it basically work? In a nutshell, we start with a discovery call. In fact, by the end of this slide deck, I'm going to give everybody an opportunity to have a one-on-one call with me. But every mortgage process starts with a discovery call where we learn about yourself, your dreams, your desires, what you're looking for, and to see if we are a good fit to work together. If we decide that is yes, then we start with a mortgage application. That is the very first thing we do after that discovery call. Unless we have all documents, we can't really assess you. It's kind of like going to the doctor and saying, "Hey, I have pains, but I'm not going to give you my medical history," right? So we require, um, that mortgage application from the start. Then we look at your income, your debt, positives, negatives about your financial situation. We break it all down. We create an action plan to follow. At some point, we would have to check your credit. I tend to leave that personally myself sort of to the end. But once we check it, again, that might improve our situation, might not change it at all, or maybe we have to pivot a little bit. Uh, Once that's done, I give you a purchasing number. I say, hey, this is what you can afford. And then you call up your realtor and you go home shopping. That is the mortgage process from start to finish. And there's a lot of other nuances that we're going to get into tonight, but this is essentially the breakdown of it. Like I said, there's an opportunity for everyone to book a call with me. If you'd like to preemptively do that, you can scan that QR code, and I think it's in the chat as well. What about the home buy? So that was the mortgage buying process. What about the home buying process? Again, once you have that I've pre-approved you and I've given you that number, you go out and you find a house with your realtor. You make an offer, you present it to to the other agent. Once it's approved, it's submitted to the lender. So that's my job is to take that offer that's been approved and you've agreed upon it. I submit it to the bank. We get an accepted commitment. We fulfill all the conditions to that commitment, and then we wait for closing. That's essentially the process from the mortgage side and the realtor side. Let's go home shopping, shall we? It's a beautiful home. I think you can all see this. Just and I chose it for a reason. I like the price point, and I also just like this house. It is essentially move-in ready. I mean, there's beautiful bay windows, uh, beautiful, beautiful kitchen that overlooks a playroom. There's an outdoor court and sliding door and an exit to the backyard. There's a lot of little other little nuances, the different bedrooms, and just a spectacular backyard. Uh, a little well. I don't even know if it's operational. Uh, but I've never really introduced a listing. By the way, I have no connection to the listing. I'm not connected to the realtor in any capacity. But I've briefly spoken to her. Her name's Ashley Alves. But the reason why I brought this listing to your attention is when you're looking at homes, I I want you to go down to the property summary. These are things that are really important to you. Here you're going to see the annual taxes. That affects our mortgage approval. And if you would like to get a hold of this property, you can just click right over here to the realtor's website. And this is Ashley Alves. And that's her. She is a listing agent. And I have her permission, by the way, to present this to you. So if you'd like to get a hold of Ashley, you can reach out to me and I can make that connection for you. So what do the numbers look like? Let's say you want to buy this house. So it's listed for 1.049. There's a couple ways the mortgage process works when we're looking to buy homes. You need a down payment for this house. A down payment is the money that you provide to the realtor to eventually and to the bank to say, I have some skin in the game. Now, the minimum down payment, if you wanted to buy this house with the least amount of money possible down, this is how we calculate it. We take the first 500,000 of that 1049 and we multiply that by 5%, and that gives us $25,000. So at least we know we need $25,000, but we need a little bit more than that. We then take the purchase price of 1049, we subtract this 500,000 that we were just looking at, and we are left with a balance of 549,000. We multiply this by 10%, and this gives us a total down payment of 79,000. So if you wanted to buy this house, and the formula works for any house you're looking at. The minimum down payment you would need is about $80,000. That is the bare minimum. If you were to put down that bare minimum purchase price, you'd have a mortgage of about 969,000. That's a big mortgage, and your monthly payment would be around $5,000. That is now it's on this house, right? Obviously, if you bought something a little bit less expensive, if you bought something for half the price, obviously all of these numbers would be shrunken right down. So don't be alarmed by these numbers. I get it, they're large, but it's all relative in terms of the purchase price that you're looking at. And what if you ended up putting a larger down payment? So you have 20% down payment. Well, in that case, again, your monthly payments drop to about $4,000. And I did presented this just to give you an idea how the numbers work and how down payments calculated. And again, we can go over that privately at a future date. So, first-time homebuyer tips. Based on years of doing this, I can tell you that a lot of people maybe sometimes end up in the wrong type of home or the wrong neighborhood. And my job here is to help you avoid that. So, tip number one, buyer benefit advantages. And we're starting off with insurance. And we all know what insurance is. We have an idea what insurance is, but insurance in the mortgage world is a whole different animal altogether. Yeah, so insurance. What does that have to do with getting a mortgage and buying a house? Well, there's three different types of insurance that we're going to talk about. Actually, we're going to talk about one of them, but there are three different types. There's obviously the first one, home insurance and auto insurance, the ones we are all familiar with. That's not our topic for tonight. There's mortgage insurance. So when you are purchasing a home and you are putting less than 20% down payment, so that example I showed you earlier with 5%, you have to, by law, like there's not even a choice, it's not even an option. Mortgage insurance is included in that purchase price. And it could be 20 to $30,000 or more, but you can't opt out of it. I had a buyer tell me, he's like, George, listen, I have insurance. I will opt out of this. But it's not an option. Like you're not allowed to. This is in place in case you decide to say, listen, I'm out of here. I'm going to the Bahamas and I don't ever want to come back. The bank, the lender is protected by from their investment, and this comes from the government. So it is, and there's three different insurers that are in the market: Canada Guarantee, Sagen, and CMHC. So this is something you have to when you're putting less than 20% down. If you're putting 20% or more, we can discard this. But that's not even the topic for right now. It's this one right here: mortgage, life, and disability insurance. So when we are going through the mortgage process, we get the approval from the lender, we have all the documents to sign. I will send you a document on mortgage, life, and disability insurance. I have no choice. I have to. The government, it's enforced by the government. So by law, we have to offer it to you. And the reason why I'm bringing it to the front is because I can tell you exactly what 90% of mortgage brokers do. They leave it to the very last thing in the process. Let's say you bought a house and it was today, July 23rd. You bought this house July 23rd. You're all happy, you're waiting for the keys, and let's say it's going to close in the middle of September. And you're all excited. You're like already going like window shopping to see all the things you're going to get for your new house. And tragedy hits. You are still liable for this mortgage. That's why when I am working with people, I tell them, listen, just take the mortgage life insurance. You can cancel it 2 months later, get all your money back. In that 2 months, you can find another insurer if you'd like to. In fact, ours probably isn't even the best, but it's better to have something than nothing. And that's mortgage life insurance. The Because think about it. So a lot of families, they're just single family homeowners. That that one earner leaves, and things can be difficult. And I'm going to show you an example of that just right now. The other part of insurance that we have to offer is disability insurance. So mortgage, life, and disability insurance, what is it? Essentially, it pays your mortgage if something happens to you. Disability coverage covers your payments, and life coverage covers the entire balance of the mortgage. So it protects your family, keeps everyone safe. It's flexible, it's easy to use. And like I said, even if you didn't want to use the one that we have to offer you, you're more than welcome to go and get something afterwards. But whenever you buy your house, your first house, be it with me or with someone else, they're going to offer you this. I can't stress it enough, the need to take it. Here's Emily, 3 kids and a husband, and their house is for sale. Emily had to put the house for sale because her husband passed away. She has a part-time job. She could no longer maintain her mortgage payments. And she's gone from, working their whole lives, struggling, finally bought their house, living inside, they're building their house together. And unfortunate thing happens, and the husband passes away, and she is now forced to sell her house. If they had mortgage life insurance, or even from like from Sun Life or any other organization out there, that mortgage would have been paid for from the insurance. I can't stress it enough, the need to have it. Listen, if you're a single person, you're a bachelor by yourself, I get it. Maybe you're like, I don't need this. I can understand that one. But if you have a family or you have a partner, this is so important uh, to, to not have anything like this. And here's Frank. Frank is a married father of three. He's a firefighter. Uh, and Frank was at the gym. He was working away, lifting weights. Something happened. His muscle snapped off from his bones, and Frank was injured. Obviously, Frank's not going to be a firefighter. He can't be swinging down the ladder, the pole, and certainly couldn't be fighting fires. But Frank had disability insurance. The insurance kicked in after 2 months. They walked in. Frank was still off leave, and they literally just carried over all of his mortgage payments. They took care of his mortgage payments for up to 2 years on any single injury. That's what they did. In fact, Frank also had a rental property. That insurance was covered as well. And on top of that, the fire department eventually brought him back to work, but because it wasn't his same job, they still kept paying for his insurance because it wasn't the same job that he had before. It was a desk job rather than driving the truck. By the end of it, Frank was making money hand over fist because he had this insurance. And the last example is yours truly. That's me in the ambulance a couple years ago. I was I was in Greece and my left foot gave way as I was walking on those cobblestone streets and I broke my ankle. I was off work for the longest time. I was on crutches. And guess what? I did not have a disability insurance. I'm the guy who presents it to other people, and I didn't have it at the time myself. Uh, and I think when I counted just like the thousands of dollars, thousands that they would have covered that mortgage for me. I have it today, but today I pay a lot more for it. The younger you are when you get insurance, the lower the premium will be, and it doesn't really change. Guys, I can't stress this enough. I'm going to get back to everything we're talking about, but this is something you're not going to hear from anyone out there, and it's so important that you have a talk about insurance, your family, your family's your everything to you, your kids, your parents, and it's really important to have it. Buyer benefit number two, buyer advantages. There's a lot of advantages out there that people don't even know that they exist. So I'm going to talk about a few buyer benefit programs here. The first time home buyer savings account, the frontline workers program, the RRSP program, and the land transfer tax program. And there's also a home buyer's tax credit. That's five. I said six. The sixth one, I'm going to save it until we get to down payment. So quickly, what are these? First time home buyer's tax credit. So you can actually claim on your taxes about $1,500 on your federal tax return when you buy a house for the very first time. A lot of people don't even know about this. Heck, a lot of accountants don't even know that this exists. But you should be aware of that. You could write that down, first time home buyer's tax credit. First time home buying savings account. So the government allows you to contribute up to $8,000 per year to a maximum up to $40,000. This is money that is not taxed and it's saved in a savings account, and it's the most powerful tool available to help you buy your very first home. And you might be thinking, listen, I'm not even close to that. And I get it. Listen, it takes time, especially in the environment we're living, where I had a lettuce cost like $10, and prices are out of just are skyrocketing. But the best way to do this is to go to your financial institution, wherever your pay gets deposited to, and every week or every month, have them take a percentage of that income, a dollar amount, and have them automatically directed to another account. That is the easiest way to do this because you're not going to notice that difference. And that account will continue to accumulate over time. Frontline workers programs. A lot of lenders, not a lot, there's a few lenders have discounts. So if you're a frontline worker, You're part of the Department of National Defense. You're a high school teacher. You're a nurse, firefighter. There are rate discounts for frontline workers. There's cashback amounts. There's rebates on closing. Uh, Underwriting is a little more flexible. There are advantages if you are a frontline worker. So something to keep in mind of. The home buyers plan. So the first time home buyers plan, otherwise known as the RSP plan, you can contribute up to $60,000 from your RSPs. So if you've been saving those RSPs for about 15 years, you've accumulated this whole amount of money, you can actually use that tax-free uh, to put towards your down payment for your house. And if there's two people, then it's $120,000. This has been increased from 35,000 that it used to be. So again, it's a powerful tool that exists. You can use your RSPs to help purchase your first home. And there's a land transfer tax refund. So if you buy a home in Ontario, you can get up to $4,000 back on your land transfer tax. So what does that mean? So when you buy a house in Ontario, you got to pay tax. There's a tax on the home that you pay, and it's called land transfer tax. The ownership of that house is being transferred over to you, and that triggers a tax. That being said, the government has a $4,000 cashback on that refund. And in the city of Toronto, they also have a municipal land transfer tax. So there's quite a bit you can save on your taxes just by accessing this program with your lawyer. And what if you're not in Ontario? You're in another province. Guess what? A lot of provinces have very similar uh, buyer benefit programs, and you could look those up if you decide to leave Ontario. Two ugly facts. So big banks, they will steer you away from most of these first-time home buyer programs because they don't simply understand them. They don't. They don't have them. They don't offer them, and they're going to turn you away, or they'll steer you in a different direction. And your friends. This is a one that I got a bone to pick with this one. And I get it. Listen, you love your friends. We like to hang out with our buddies, but everyone sometimes feels they're an expert in real estate, or they've gone to the hospital, so they feel they're expert doctors now. Whatever institution they've gone through, their emotions trigger this thought that I'm an expert. The fact is, your friends are not realtors, they're not mortgage brokers, they're not experts. And it is so important to work with professionals in any capacity, in a capacity that you're involved in. And that takes us to tip number three, shopping before getting pre-approved. Have you ever made a cake before? Have a party happening? You have a few friends coming over, and you're so excited. You're baking this cake, and you're taking a lick with of the batter, and it tastes so amazing. You're so excited. You're gonna have this wonderful cake, and then it comes out like this, and you're like, "Oh my gosh, what happened?" I mean, it's still a cake, but that's not it's not something you really want to serve to any of your to your co- to your guests. And this is why you need to get pre-approved. When you are pre-approved, you know exactly how much you can afford. Imagine going house shopping and not knowing what you can afford. People do it all the time. And it is such a waste of time, their own time, right? Know what you can afford. This will allow you to focus on the right market, the right property. That one I showed you earlier before, that's not for everybody. That's for a targeted first time home buyer or even a second time home buyer. It's not for everyone. So you really want to focus on the market and the right property. And you want to shop with confidence. There's nothing, I'll use the term sexier than just confidence. When you are confident, you know exactly what you want, and you're not letting anyone get in your way because you know exactly what you can afford. And then you tell your realtor, this is what I want and this is what can I afford because George has pre-approved me. Tip number four, you really want to have a professional dream team with you. Here's Team Canada. This was a dream team put together. All the greats winning gold for Team Canada. And you want to have a team like this in your back pocket so you can celebrate when you buy that very first home. Who should be on your dream team? Hopefully, it's me, the mortgage broker, your realtor, your agent, not the listing agent, your agent. A home inspector, again, not the listing agent's home inspector, and a lawyer. And we have contacts for all of these individuals, but this is the team that you want to have behind you. When you have a team like this, you can actually, again, you can shop with confidence, and everyone has a role to play. We had a file in progress, and somebody called it was a condominium purchase, and everything was getting approved. The mortgage had gone through. They were about to waive all conditions, and the lawyer piped up and said, "Pull the plug, walk away from this file." The A condominium has what's called a status certificate, and it basically tells you how healthy the uh, the condo fees are for a condominium, and that's for things like replacing windows, doing the roof, doing all those general maintenance items. And in this particular condo, the reserve fund was zero. So easy to get into this house, difficult to sell. And the lawyer helped to save that deal. When someone does buy a condo, one of the first things I will do, I will call one of the insurers and I will ask them, is there any issues with this property? And if there are no issues, I tell the client to proceed. But it will be the lawyer who eventually looks at that status certificate. Number five, not having stable employment. Guys, when we look at getting a mortgage, there's a couple things involved. It's employment, your income. It is your credit score and your down payment. Those are the three things for getting a mortgage. When one of those things is out of whack, well, maybe we can still make it work. But I can't stress the need for how important employment is. So the banks want to see that you've been working for at least 3 years, hopefully in the same company. It shows stability. It shows that you're reliable, and the banks really do like that. Now, what if you move from one field, from one job to another? If it's in the same field, that's fine. And even if it's not in the same field, as long as there's a justification for why someone has moved employment during a 3 year period, that's something we can explain. Part-time income and cash income. So in Canada, if you have part-time income, a lot of people do Uber driving, you know, they have various part-time jobs that they do. That money or that income can be used to help you qualify. However, we need to demonstrate that you've been doing it for at least 2 years. Now, sometimes there are some exceptions that we can get. If the file is really strong, if the loan to value is really low, we can bypass some of that. But for the most part, we need 2 years of income to help to use that part-time income to help you qualify. And what about cash tips? You know, there's a lot of jobs out there where people get tips, maybe not cash anymore like we used to, but any cash tips that you receive, even if it's like alimony or spousal support, make sure it's deposited in your account. We want to show evidence that it's real. And that's how we can use it. I had a client once, he was getting $20 cash tips from his employer, and he literally just shoved it into a suitcase underneath his bed and pops up and says, I have like, $20,000 worth of tips. Can we use that? And we got it approved, by the way, but um, yeah, that's a situation we want to avoid. And if you're self-employed, we have a lot of people on the call today, and obviously people come from all different walks of life. If you're self-employed, we actually have self-employment programs for them as well. So sometimes you're self-employed. Let's say you're a contractor, you're a drywaller or a plumber. You declare one income to the government, but you're obviously making a lot more money. We have a way to negotiate that to use your higher income. Employment. Are there gaps in your employment? Sometimes people go back to school. Sometimes people go traveling. If there are gaps, you need to let me know right away or the broker you're working with so we can explain those gaps and we can plug them before the lender starts probing why there are gaps. We want to offer those explanations. Again, like I said, there will be a time. to have a consultation call with me, but if you'd like to preemptively book a time slot, you can scan the QR code or click on the booking link, which is in the chat, and book a time period. But it's a complimentary consultation, and there's no obligations at the end of the day. Number six, and we're almost done. Down payment. Uh, when I was going through the topics, when people were registering, one of the issues, I've been doing this long enough, I get it, it's down payment. It takes a while to save up a good chunk of change. And I want to talk about that quickly here. So, what is down payment? It's the amount of money that you are putting towards your purchase. You have to have some skin in the game. No one's going to give you a mortgage without putting not even a dollar inside. This is These funds must be in your personal account for 90 days. That's 3 months. So 3 months or 90 days. When we are doing a mortgage, I'm going to ask you for a history of your account. And I want to see 90 days that you've had your down payment. And the reason that they ask for it, the government and banks are concerned for money laundering and proceeds of crime. They want to make sure that this is actually legitimately your money. And the best way to do that is to offer a history of your account. And they will always ask for 3 months, which is 90 days. Simplified down payment. So you found the house, you're ready to make the purchase, ready to I'm going to ask you for some down payment history. And you're going to say, George, here it is. Here's my account. And here's month one, month two, and month three. We got our 90 days. Buyer one and two. This is really simple and really easy. This is what the banks want to see. It's easy for you to acquire. It's easy for me to understand. It's easy for the underwriter at the bank to say, okay, check mark, everything looks good. But sometimes we get this. This is what we want to avoid. So you have buyer number one. They have money in their savings account that they're using for their down payment. Well, we're going to need 3 months history for that from that account. Let's say they have a tax-free savings account, also buyer number one, and they're using some of that money towards their down payment. We're going to need 3 months worth of that. What if they have a checking account? You can see where we're going with this. We're going to need 3 months worth of that. What if they have stocks, cryptos, RSPs? They have gold coins that they've amassed. And they have a checking account. We're going to need 3 months worth of evidence for all of these items. So if you know in the next 3 to 6 months you're going to be buying a house, put it all together, transfer it to one account. You know you're going to buy a house, and it's just going to make everyone's life a whole lot easier. Down payment. Like I said, it's the amount of money you put towards your purchase. This is your own saved funds. It cannot be, you know, Bob's down the street. Can't be your uncle's. It has to be money that you have earned. But it can also be gifted. So your parents and your siblings, they can actually gift you that minimum down payment, that 5%. Your down payment can be gifted. It's happening a lot more often now that the bank of mom and dad is coming in from the houses that they have to provide their kids some down payment. So if you have that advantage, it's wonderful. It is allowed by the government. And sometimes we tell people as well, if you know you're going to be buying soon, don't have any unexpected large deposits in your account within 3 months. If there's a large deposit, it's going to be flagged by the underwriter and they're going to want to know the history for that large deposit. So if there is something coming your way, either do it beforehand or do it afterwards, but not within the 3 month period. So down payment, I just want to break it down really, really quickly for everyone. There's two types of down payment that you can get when you're buying a house. If you're putting, let's say the bottom column here, 5% to 19%, if that's your down payment of whatever the purchase price is, that's what's called an insured mortgage. That means you have to get mortgage insurance. It's not an option. It is mandatory. Uh, and there are strict government rules with very little latitude when we are working for an approval and there's um, down payment less than 20%. However, once you get to 20% or more, it's called a conventional mortgage. This gives us a lot more latitude in terms of lenders that we can use. Remember that first slide I showed you all those different lenders we have? We can access a whole slew of different lenders and to help get that mortgage approval. Insured mortgages, by the way, will have better rates than conventional mortgages. And I know that might sound a little counterintuitive, but that's sort of the way the rate game works like that. And one more thing on down payment. Guys, this is something you're probably not going to hear from anyone else. There are very few brokers actually know about this. Down payment is one of the things that everyone struggles with. What if you had 5% down payment and it wasn't enough? So we have what's called a home buyer down payment assistance program. That's right, you read that twice. That's a down payment. We're going to help you with your down payment. It is the one area that a lot of people do struggle with. So let's give you a brief little example and some real numbers here. Let's say you want to buy a house. The purchase price is about $1 million. So the minimum down payment, I've done the math, it is $75,000. That's the minimum down payment to buy that house. But I guarantee you, if you're buying a house for $1 million and you're putting $75,000 down, your mortgage payment is going to be insane. It's going to be really high. Now, if you put 20% down, your mortgage payment becomes a lot more manageable. And you might be thinking, where am I going to get 20% down? I only got five. So let's say you got that 5%, which is $50,000 in this case. Great. You got $50,000. You're nowhere near close to that getting to 200,000. We have a partner that buys the house essentially with you, but it's not, the title would be in your name. Think of like a lien you get with your hot water tank. That's sort of what this is like. So the investor comes in with 15%, giving you that $200,000. Now we have a lot more latitude because we are at 20%. And the investors could be private investors. One of them, in fact, is Scotiabank. Scotiabank actually is one of the investors for this program. If you walked into Scotiabank and you said, "Hey, I'd like to access your down payment assistance program," they're going to look at you cross-eyed. They have no idea what you're talking about because it's not something that's offered in the branch. But the fact that Scotiabank is involved in this gives you an idea of the legitimacy of the program. So in this case, 5% and 15%, that's what the mortgage looks like. And it's an equity split of 25% of the house is yours, 75% belongs to the investor. 3 or 4 years down the road, you decide to sell the house. You walk away with your initial down payment, money you've put towards the mortgage, and so you walk away with a lot more money than you did when you first came into the program. And this is for someone who down payment isn't really there, struggling with it, but it's a way to get your foot in the door. It is not a program that someone wants to be in for the long term. Like I said, you want to hold it for 3 or 4 years, sell the house, exit, or pay off the investor, which very much could be Scotiabank, and then move on. But it is a way to get your foot in the door. And again, I can talk about this more in more detail privately off the air. And the last one, what if you could rent to own? So there are programs, there are lenders out there that have rent to own programs. And essentially, you are matched with an investor. You are pre-approved at today's levels with today's metrics, and you set a purchase price in 3 or 4 years. You're going to buy the house back at a pre-arranged price point, and then you rent to own it. You actually own the house. Well, you don't own it right now, but you act as if you did. Any repairs that happen are all yours. You pay your monthly payments and a little bit more. because that little bit more goes towards your down payment. And so this is sometimes we use this because down payment might be an issue, or let's say there's a credit issue, and it might take a couple years to resolve that credit issue, and that's where rent to own really comes into place. There are some cons with it as well. The monthly payments are a little bit higher, and not everyone is suitable for this program. And if you decide to walk away at any point, you could lose some of the money you put towards it. So again, it is something that's available to you. If you are renting and you're like, I'd like to own it, we could go through some of the details and I could match you up with the renter own programs. And we can see if this is something that's good for you. The rate myth. We get this a lot. The banks have trained Canadians to always ask about the rate. It's the number one question I get as a mortgage broker. People call me up, hey, what's the best rate? What's your best rate? What's your best rate? It is the most common question. And what I have to say is, are you buying? Are you refinancing your house? Are you transferring the mortgage? Do you own other properties? How much down payment are you putting down? Are you a first responder? Because all of these questions here have different rates involved. And that's why it's not about the rate. It's about putting a strategy together that helps you and your family to move forward. It's not about the rate. And I'll give you some examples here. You can meet Jordan. He owns a rental property, lives with his parents. He went to the big bank to get a mortgage for his house, so to buy a personal residence, and he was denied. The big bank said, no, I'm not going to tell you which big bank, but you could probably take a big, wild guess. And he came to me. We were able to offset 80% of his rental expenses and get him a mortgage approval that was a lot higher than what the bank had offered him. What's the point of having the best rate if you're not approved for the mortgage? And you can meet Derek. I called Derek up and I said, what matters to you more? Is it the lowest rate or the lowest payment? And you might be thinking, well, obviously the lowest rate will have the lowest payment. I won't tell you which bank, but you could again take a guess. But in this case, at the time that we were doing this, 4.24% was the rate, and that was a monthly payment of $28.96. He could handle it. Or we could have gone for a lower rate, 4.14, but a higher monthly payment. And the difference was how we calculated the amortization. So we can structure the mortgage to help facilitate your family needs. But simply sometimes by changing the amortization that we're using. Number 8, credit score. What is credit score? Like I said earlier, I said credit, your income, and your down payment are the big three items. Credit score is the likelihood that you will pay back the loan funds. Imagine if you were lending money to your friend, you would want to make sure they pay you back. That's what credit score is. Are you likely to pay back? The score identifies that. Most Canadians are in the 720 range. That's the average rating for most Canadians, and it's considered a good beacon score. And just to go back here, obviously, if you are on the lower end of the spectrum, there is a point when you can no longer qualify on what's called the AAA prime side. But again, we work together to help you to get through that and move that credit score in the positive direction. Couple takeaways from credit reporting. No one can pull your credit without your permission. I can't stress that enough. Your permission is required in order for someone to pull your credit. When I do it, I have you sign it, and I'm actually going to call you up the day that I do it as well. So I want to make sure that you're fully aware of it. Second takeaway, soft pulls. Let's say you're going to get off to get a cell phone and they're going to check your credit score. These are considered soft pulls. They're generally fine, don't really affect you a lot. And your credit fluctuates. It's very normal for the credit to go up, to go down, to go up, to go down, and we can work together to help it move in the right direction. Couple of options, couple of things you should have here. You should have a minimum of two credit cards. So with between yourself and your spouse, each of you should have two credit cards. And when the balance comes in, always pay more. And for example, the balance is $400, pay 410. You'll be down to -10, and uh, this is a great way to help improve your credit score. Equifax updates every 45 days. So every 45 days, this will update. And big red alert. So you've applied for the mortgage. You've been approved. It's gotten through. All the conditions have been met. You're just waiting for your day to come by to close. And like I said, you're buying today, so July 23rd, everything was accepted, everything was approved, and the house doesn't close till September or the end of September. And you decide to go home shopping, to go buy some appliances and all sorts of new stuff that you're going to put on credit. Do not do that. Wait until the keys are in your hand. When the keys are in your hand, then go and make those purchases. Do not do that. The lender will pull your credit score. Again, if you have the cash to do it, that's one thing. But if you're applying for credit, you really want to stay away from this. It creates a disaster, and sometimes we can't help get you out of that. We're going to try our best, but we want the easiest ways to avoid something like this. And tip number 9, we're almost at the end. People get intimidated by the numbers. There should be no confusion when you're buying your house. You should know exactly what the title insurance is going to cost, what if there are lender fees, what those are going to be, what the lawyer fees are going to be. There should be uh, no 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 questions about, taxes or insurance and what your monthly payments are going to be. All of this should be disclosed to you before you even we even submit something to the lender. So it's very important to know your numbers. And I was asked a few times who pays me during this whole time. So I'm doing all of this work. Who pays me? Well, when we go to a AAA lender, so like a First National or a TD Bank, it is the bank that pays me 100% of the time. I was working with my client Jesse. We did his whole mortgage, everything closed, and he said to me, "Hey, how much do I owe you?" And I said, "Nothing. You don't owe me anything. The bank pays me." Sometimes we have to go to alternative lenders, and maybe the credit is really where it needs to be. Maybe some of the ratios are a little bit out of whack, and we have to go to an alternative lender. In that case, the client might pay up to 50%, but there's some wiggle room on that as well. And sometimes we even have to go to a C or D lender. So this is a completely private lender. This is like John down the road who has a lot of money and wants to loan their money out. And in that case, it is the client that would pay uh, the 100% of the time. And that's how that works. And the last tip is not hiring a gladiator. You want to hire a gladiator when you're making your purchase. What is a gladiator? Any dummy can input data into a computer. Anybody could, anybody could put up a lockbox. My job is to pick up the sword and fight for you and to use a shield to protect you from harm. That's what I do. I want to preemptively get in there and make sure the coast is clear for you. You want your kids to go to a better school than you did. My job is to make the impossible possible. I want to be the guide for you to build more equity, retire faster, and be mortgage free sooner than later. And selfishly, I want you to be an insanely raving fan and that you want to tell everyone about the wonderful experience you had. And there's a couple things that we do differently. Like I said, we will build you a custom budget proposal. You're going to know exactly what your numbers are going to be. We're going to call in favors from lenders, and we do have them. Last year, I was on the call on New Year's Eve and New Year's Day with a lender because the client had put an offer in on New Year's Eve. I can tell you exactly where the bank is on New Year's Eve. They're closed. And I can tell you on New Year's Day where the bank is. They're closed. I was open. My lender was open. I was able to call in those favors. Yeah. And we do negotiate hard with the lenders. They're our friends. We hang out with them. But we can sometimes go back and forth and really get approvals where things are a little tough. We're going to consume copious amounts of coffee, and ultimately, we are going to provide you with the strategy for that mortgage approval. That's what we're working on. It's the strategy. Is every tactic going to work? No, but we will pull out every stop. We're not going to stop. And at the end of the day, I'm going to look like that. I'm going to be beaten up as your gladiator. Your realtor will probably look like the same way, but we are going to make sure that the house is sold and that a mortgage has been approved. So just to recap, you want to work with professionals, guys. I can't stress it enough. Don't work with your buddy down the street. They might have all the best intentions, but the rules are changing so fast all the time, and you really want to be protected. There are a lot of buyer benefit programs we talked about. Again, I can go into more detail privately on a one-on-one call. And the three things to look at are income, credit, and down payment. Those are the big three items that are uh, focus that helps to determine your purchase price and your mortgage approval. So I'm hoping everyone, now that we've reached the end, maybe you're feeling a little bit less concerned, a little less stressed out. Hopefully you're not as intimidated as you were. Maybe you're feeling a bit more confident. I know some people said that they were a little neutral before. I'm hoping that this has been able to open your eyes to some items in your wheelhouse that weren't there before. Those of you stuck right to the end, if you scan that QR code, it's actually going to take you to a first-time home buyer's little benefit video that you can check out. It's going to look like this. It's a first-time home buyer strategy guide. That's the very first one. And moving along. Bonus number two. If you scan that QR code, maybe I should have put this in the beginning. You will actually get access to my mortgage toolbox. And I don't know if you can see my screen, but I do have a mortgage toolbox. It's downloadable to your phone. I'm here to answer your phone calls, guys, but sometimes, maybe I'm flying, maybe I'm not available at that exact moment. You can sit here and run various scenarios on your own using the online mobile calculator. So again, if you're joining on this call on your phone, just I could send you that link to the toolbox calculator offline. And bonus number three, we will reimburse your appraisal cost up to $500 value. So whenever we get someone's buying a house, an appraisal has to be done. We're going to help to reimburse you those costs after closing, and that can be up to 500,000, up to $500, not 500,000. And trivia. So I have a $25 gift card for Starbucks. If you want to participate in the trivia, you could drop your, ooh, what just happened? Drop your, I just lost my screen. Okay, here we go. Drop your answers down in the chat. So if you go to the chat, you can drop down your answers. And I ask that you put them all in at the same time. So wait till I read all the questions, and then you could drop down the answers in the chat. So here are the questions. Wait till I read them all. So, number one, get real estate advice from your friends. True or false? Question number two, how many months does the down payment need to be in your account? Is it 1 month or is it 3 months? or it doesn't matter. And trivia question number three, buying a home is like a smoothie of real estate because A, you always want to blend your whole dream team together, or you want to drink it fast. Oh, and Marissa Durant said false, 3 months in A. Okay, all right. Marissa, I'm just going to jot your name down and I will send you a gift card after we're done. So sorry, guys, Marissa was the very first one. Um, and Marissa, I'm uh, City Square. If you want to send me an email right there to that email address, and I could respond with the gift card. And folks, one more thing. Like I said, I am going to provide a complimentary consultation with everybody that was on the call today. If you'd like to preemptively book a time slot, you can scan the QR code and we could have that discovery call that I talked about in the beginning. And it's Q&A time. So if there's any questions, feel free to put them in the chat. Should I get a home inspection? Yes, absolutely. You should get a home inspection. I can't stress it enough. Um, when I bought my first home, I did not get a home inspection because I thought I knew everything. I waived all the conditions. Everything was happy. Everything was good to go. I was all excited. And 3 days before closing, I went to go see the house again. I had scheduled it in the offer, and the hot water tank had broken in the basement, and the basement had flooded. Went back to the seller and said, "Listen, could you help me out? The hot water tank broke. Would you lower the price?" And they said, "No, not gonna do that. That's your problem." And I was stuck with a $20,000 repair. I, I can't stress it enough. Make sure you get an inspection when you buy a house. Yes. So anyone who is on the call will get a copy of the recording. Can I buy a home and sell my current home at the same time? I mean, you can, uh, but that can lead into some difficulties if you haven't sold and you bought yet. But typically, I recommend people sell their house and then they go buy something. Do gifts for down payment need to be paid back? Guys, when you're getting a gift for your down payment, it is exactly that. It's called a gift. There's a gift letter that you would sign, and it is that these funds, there's no expectation that they will ever be paid back. It is a gift. These are funds that are not to be paid back. That's why they're called a gift. Is there a best time of the year to buy? I don't know. I mean, everyone has their own ideas when the best time of the year to buy is. I've always made the purchase in August. For me, it's always been when people are away, they're on holidays, they're traveling, they're not here. Sometimes the sellers are expecting bidding wars and they're not materializing. But there really isn't a best time. The best time is when you are ready to buy, when you have been pre-approved and when all your ducks are in a row and you could make that purchase with confidence. Do interest rates fluctuate and what factors affect them? I mean, so interest rates are affected by the essentially the bond market, and as those go up and down, interest rates will fluctuate with them. Sometimes there are interest rate discounts. We are seeing right now a lot of discounts on the variable side. I didn't really talk about fixed mortgages and variable mortgages. That's a whole other topic. But again, I welcome to have that call on the off the air. Okay, we're gonna call it a day, I guess. Thank you, Johnny. So thanks everyone for taking the time out of your day to join the call. I really appreciate it. And like I said, I will reach out to everybody. Perfect. I'm gonna end the call right now then. Okay. Thanks everyone.